Hello everyone. Gold and silver are rallying today, and we will talk about the reasons for this sharp increase in both metals. I actually published a video a few days ago about why I think the gold and silver have reached a short-term bottom. I will post a link to it in the description below, or you can follow link here. There is a lot going on around the globe at the moment. Let's focus on three main topics: US dollar and British pound, Credit Suisse and hopes that Fed will ease on tightening. Dollar is definitely the main driver behind latest spike in gold and silver prices. Today's rally shows how fast the mood can change and how much pent-up energy is accumulated in both metals. US dollar was due for a short correction, mainly due its rapid appreciation against all other currencies and assets in the last few months. Nothing moves up or down in a straight line. Last week's news from UK, where new Prime Minister and her new Finance Minister almost collapsed UK's bond market, pushed US dollar over 114 on DXY, which was a 20-year high for the dollar. DXY is an index measuring US dollar against a basket of other currencies, mostly euro, yen and British pound and few others. What happens with any of those currencies affects dollar directly. If yen falls, dollar rises. If yen rises, dollar falls. Same is true for all other currencies in the basket to a different extent. As we all know, Bank of England had to pivot from its tightening policy on Thursday, announcing unlimited buying of UK bonds to save the market from collapse.
But at this point, we have seen fairly dramatic action. Let me just spell it out for you. The Bank of England has said that it will buy as many long-dated government bonds as required between now and October 14. So this is a window as it looks to stabilise financial markets.
This stopped the slide of the bond market, but now, UK will be facing the same problem Japan is dealing with: weak currency. This should be good for gold and silver, at least in a short term. To help stabilize the pound, UK's Prime Minister had to U-turn on her budget plan. Pound is rallying in response today, pushing the US dollar lower on DXY. This is the main reason gold and silver are trading substantially higher today. I would point out that this rally in British pound, in my opinion, is going to be very short-lived, unless London pivots back to tightening. So far, new Prime Minister walked back her tax cuts for wealthy only, and that is a small portion of her new fiscal policy that caused market panic. If we see her scrap the whole package, pound will go up and dollar will go lower, helping gold and silver to go up some more. If she basically sticks to her plan and continue QE, we might see a major weakening in British currency and another high for US dollar, and that will be bearish news for gold and silver in US dollar terms. At this point, coordination between Bank of England and UK government looks chaotic. We will see where it all goes. This uncertainty definitely plays well for gold and silver as a safe haven asset. We have some listeners from UK, so it would be great if you could update us on your views of the situation in UK. US media is not the most accurate and unbiased source, unfortunately. I would love to know if you support or oppose your new Prime Minister. Another reason gold and silver are rallying is a hope that what happened in UK would cause US Fed to pause its tightening. As interest rates in UK went up, we almost saw a collapse of bond market due to the critical situation with UK's pension funds, and it prompted Bank of England to pivot. I think US and international investors are reasoning that further tightening by Fed will cause a similar effect in some part of US economy. Given that, Fed had a very vivid preview of what can happen when you raise rates too fast, Powell and a company might decide to reconsider the pace of the hikes. Today's economic data also pointed towards slowing of the manufacturing activity in US, and it can be perceived as good news for stock market, since it gives Fed more reasons to stop tightening. I do not think this rally will last. We still have an inflation problem, and Fed clearly stated its priorities, so a lot of investors buying today might get disappointed. I am not a financial advisor, this is just my opinion. Let me know if you think I am wrong or if you think the rally is here to stay. I'm expecting a sidewise action for a while until we have some major news to move gold up. But regardless of whether this rally will hold or falter, we are seeing how oversold gold and silver market is. It took a few positive headlines to move both metals dramatically. Once investors realize that inflation is here to stay, and that the policymakers are simply trying to inflate the government and corporate debt away, we might see a vertical repricing of both gold and silver. Another item that affects gold and silver prices today is Credit Suisse. Over the last week, there were some rumors around this major European bank. Basically, this bank made some bad investments in British Greensill, a company buying accounts receivable from retailers and repackaging them as securities for investors, and Archegos Capital Management. Both investments were made without proper risk precautions, like position sizing. When those investments went bad, losses led to a huge gap in banks' cash reserves. Billions of US dollars. This affected Credit Suisse ratings and prices on credit swaps, which is basically a measure of risk. It's like auto insurance for your car. If you are a good driver and have a good credit history, the premium you pay is low. If you had an accident, it goes up. If your credit history gets dinged, your premium goes up. And every time you have an accident, the circle repeats itself, costing you more and more. Until no one would extend you a policy. Same with financial institutions. It appears that Credit Suisse is in trouble. Since it is one of the biggest banks in Europe, I doubt it will be allowed to fail. Bailouts are still a thing, and we will see a lot of them as economies drift towards recession. But this development is causing investors to revisit Lehman Brothers memories, and the risk of another systemic crisis pushes safe haven assets higher today. By the way, difficulties in Credit Suisse are just a surface of the iceberg. As Fed is tightening, credit market is also doing a lot of tightening. Last week, a consortium of major banks, led by Bank of America, had to cancel a borrowing round of almost $4 billion due to the lack of interest from investors. This environment is also contributing to the difficulties of Credit Suisse. We will know more soon. But as you can see, financial system is a big house of cards. All it takes an ill-conceived action by one of the governments, or a bad bet by one of the major banks, and the whole system is at risk of a collapse. This is what gold and silver are picking up, and maybe even predicting. Please subscribe and like if you enjoyed this video, post your comments if you agree or disagree. I would love to hear your thoughts. And even if I think the big rally in gold and silver is not here yet, and that we might see some more downtrend in precious metals, it is nice to see that it appears we are forming a solid bottom for the future bull market. Until next time.